Hola. Oh, okay, perfect. So, thank you everyone for being here. Thank you for those who are present. I'll be talking about decentralized insurance and how it's revolutionizing the risk management industry. And first, I would like to introduce myself. I'm Lucas Vinzon, also known as Primata. I'm the business developer for Degis. It's an insurance protocol native to Avalanche, and we have been focusing on this ecosystem for the past year and a half, I'd say. And we have been supporting Trader Joe, GMX, Platypus, Vector, and some other protocols in a pretty novel manner for insurance. And today I'd like to explore how a few of the emerging concepts that come with the decentralization of insurance are actually reshaping how traditional insurance could leverage blockchain technology and enable a more transparent, fair, and efficient risk trading between people that are not entirely exposed to even blockchain right now. I'd also like to discuss how different roles parties can take in this ecosystem, which is quite novel for a lot of people, and the importance for having a very transparent and fair ecosystem. I'd also explore a bit the current issues that we're facing as an industry and how we Degis are contributing to the advancement of decentralizing insurance and how we're approaching it right now. So yeah. So first, I'll talk a little bit about traditional insurance. We all know how these big institutions operate. They need a lot of personnel. They need a lot of money to operate. Overall, it's a costly operation, and it's not fully very user-friendly experience. You get a lot of frustration from claims that end up not getting paid because the user thinks that they should get a pay, but there is a whole process behind it that is locked up in the institution. So it ends up being a not ideal situation. So you're paying a premium, and they're legally obliged to cover you in case something bad happens. All of the actuarial work is done by the insurance itself, and they have to make sure that the burning cost, meaning the amount of money that is lost in the time frame that is taken from the underwriter, doesn't really surpass the accrued premiums paid to to these underwriters. Just to make sure that the insurance is net positive in the long run. But this actor, being the actuary, but also the underwriter, and also the actor that will evaluate all the claims, creates a party that is not really incentivized to provide these payouts. They're not their incentives are not aligned with what they should perform in a fair manner. So it's part of the business to actually find reasons to not grant payouts. So ideally, you'd have a party that is incentivized to find the most fair claim deal between the two parties. At the same time, on the other hand, it's a very ingrained industry in our society. It's tied to a lot of legal bindings. Once you buy a house, you probably have to have some form of insurance for fire, or it depends from country to country. Or if you own a car, you have to have an insurance. but it's an old trade in this world. It has a lot of historical data, a lot of experience, and then a lot of experienced personnel who have been working in the insurance space for quite some time. So it has been a well-established industry for this whole time, for the last 6 centuries. So this should lead us to how decentralized insurance breaks this whole scheme down into components in a newer, more transparent and decentralized paradigm. Ideally, instead of a big company, it's a network of people who pool their funds together to provide coverage. And you'd have also coverage buyers, users who govern the protocol and take decisions together to define how things could move forward, find new opportunities for liquidity providers, or fine-tune fees, or whatever, how they could govern it. And you could also have users who are providing services like actuarial service, marketing service, hedging risk, but pooling funds, providing these services to the insurance ecosystem in a meaningful manner that is taken into consideration once the protocol is built. So you start to see people who are taking roles that were not really accessible to them before. Underwriting is something that is basically institutionalized. Recently, you've seen off-chain some decentralization. You've seen companies that are actually allowing users to provide funds and earn from it, but it's certainly new and it's certainly novel, and having everything recorded on chain actually changes everything, brings a lot more transparency to the user, to the actuary that could use this data to model and define coverage prices and work on top of this data. And it also ends up being a lot more transparent for payouts, so users can know how the protocol is operating. Other users can actually see how a payout was given, so they can properly evaluate if a protocol is paying out things. And yeah, it's a way more transparent way to handle insurance. So yeah, in the decentralized insurance ecosystem, ideally you have users who can act as a policyholder, insurers, governors, actuaries, also auditors. It all depends on how they're willing to approach the ecosystem. They might not be exposed to the ecosystem and in the risk trading side, but they could individually act within all of these different roles that before were not really available. So protocols that manage to allow users to participate in all of these aspects of the protocol and probably incentivize those parties to operate correctly should greatly benefit from the decentralization of decision making in their insurance protocol, leading to a reliance on a multi-party system where each party's role is aligned with the incentives, and there's no confusion in what an underwriter is providing and willing to do, and what their end goal is, and what they're actually getting, and what they are influencing in this ecosystem. So we're actually seeing a lot of growth in the sort of decentralization in blockchain. enabling these individuals and organizations to create and participate in all sorts of protocols that are designed with the same scheme in mind, so beyond insurance. But for insurance, the decentralization should allow for a greater flexibility, more transparency, fairness, and a way more efficient process. Since you are also removing some intermediaries that are there just for the sake of handling claims or picking up calls or whatever. So just going back a little bit to transparency and fairness. I think that, well, personally, I would say that I consider it essential for the success of a decentralized insurance. It's very aligned with the blockchain-based nature, of operating transparently, having everything recorded on a ledger, and this should ensure that, since it's all immutable, you can actually backtrack it and figure out, basically as a user, you'd like to buy, if you like to buy coverage or not, and this should establish trust and actually drive people into an ecosystem that actually values having them in paying their coverage or providing liquidity or whatever other way they might want to participate. So this level of trust is also really important to be achieved in the protocol level, because people protocols should historically give both risk buyers and sellers a fair deal. Else, why really use it, right? And until now, a few aspects of on-chain insurance that achieve quite a bit of trustlessness have been doing quite well and not really relying on human decision. And a good example would be options for token price, or basically. And you see a constant work being done on oracles and improvement on the development side. Which should lead us to issues that we're facing in the industry. Right now, we for Degis at least, protocol insurance takes a great deal of trust to handle an incident settlement. There is a whole governance process that will validate the incident and route funds if anything happened. You have other protocols that are also handling it with incentives, like Nexus Mutual. They have people that are dedicated to handling incidents and are penalized if anything happens. But I believe there should be a lot of work to be done on specifically that side to actually achieve an interesting level of trust given to the insurance protocol. We are also struggling quite a bit on a competitive yield that balances yield and risk that users are exposing themselves to, because they're not really only exposing themselves to one single protocol. They're exposing themselves to protocols that are supported by the insurance, which ends up being quite risky in the crypto space, and that leads to a lack of coverage available to users to actually buy. So you have a lot of potential buyers, coverage buyers, that are not really able to to buy their share. Additionally, I'd say that historical data are required to accurately assess risk and price isn't really processed a lot. You see a lot of protocols like insurers, they have actuaries that are working on models, but there's not a lot of experience from actuaries working in the crypto space. So it's still a novel thing for those people, and it ends up being they end up producing models that are early stage. So overall, we are certainly not in an ideal state, I'd say. So how we're addressing these issues as a protocol. So we've pioneered with our protocols in a few manners, but we're certainly not at the point that we want. We're always actively working to address these challenges and advance the adoption of a decentralized insurance. And we have designed our solutions in a manner that facilitate these core aspects that would make decentralized insurance that would make it great. So we always have in mind fairness, transparency, and we want it to be for everyone to participate in the way they really want. So we have deployed an options market, and we use an AMM so that the market can potentially speak for itself, and users can hedge the risk accordingly to currently disposed data that is also available to everyone, and that is we're talking about on-chain assets. We also have an aggregated liquidity so that we're optimally using liquidity throughout multiple protocols. And also users can provide liquidity with just one single asset, trying to tackle the issue of low liquidity and insurance pools. We're also always looking to perfect the imbalance between the two sides of risk being traded. So we're always trying to fine tune how covers are priced, how much available price are, how much coverage is available for current underlying assets. Yeah, we also believe that it's indispensable to always closely monitor risk on chain. So we have partnered with a few security actors in the space to always have data being fed to us, so we can act quickly, swiftly, and also price things properly. Know that if there is any possible risk with upcoming updates, we are also considering that, having that into consideration. And yeah, basically also taking it as feedback from the community, having all parties involved in this whole process, defining the future of the protocol. So it's definitely not in a way that is bringing a lot of decentralization. We're centralizing these solutions quite a bit. So this should lead us to our future on how we want to decentralize decision making, and model it in a way that it fits this vision for the insurance ecosystem on chain. So we want to allow users to collectively participate in the decision-making process. And we want to have Degis ensuring that the insurance ecosystem is governed by the community rather than a centralized entity. It should really democratized how pools are decided to operate, and uh, how the protocol is handling required demands from the community. So if we have a protocol that that the community wants to get support, we can handle it properly and incentivize who would like to provide liquidity for that or support the protocol. So if it's new, if it's old but it got back traction or whatever. So yeah, ultimately we want to really have the protocol work for everyone, no matter the size or side that they're in on the risk trade. So for the future of insurance, this should bring us to what we would like to see in this space being built out. Something that I have been thinking a lot is how incentivized actuarial work could be done. So if we could allocate funds so that actuaries can be dedicated to protocols, or if they are willing to start off working and discover crypto, they can have some of their work being incentivized by the protocol, having fees routed to them. It should definitely be something very interesting in the short term that could lead to an interesting structure. Something that I would really like to see is the trust reliance reduction through on-chain parameterized cover claims, so that imagine if there is a difference in token representation. So you have, let's take as an example, Vector. They have their own tokens to represent how much funds you have in Vector, but that fund ended up being taken out. You end up with the tokens, so you end up with a total supply of these tokens, and there is a significant difference between that and the actual amount of money in the underlying protocol, and that should trigger an incident instead of relying on, and it should also process the whole claim, and that should stop us from relying on human decision on how these and really process the payouts. This should be essential for the future of decentralized insurance, because you're really enabling a trustless claiming process. We also have a lot of newer option models being built out. For example, arrow markers, they're building a shows black model on chain, which is really interesting. And they have a single pool of liquidity for all tokens being insured, which is and it's quite interesting how they're building it. So yeah, that's something that really excites me, that really moves the boundary of insurance further from what it used to be and what it could become. And something else that really excites me is bringing in real world assets into the chain, and then having insurance for those assets, and allowing users to buy coverage and on them. Maybe on the short term, you probably see S&P 500 insurance, but maybe in the future, so you can also have token flight. Right now, you can actually buy coverage for flights that are delayed or anything like that, but it hasn't been fleshed out quite a bit. It needs a lot more being utilized on chain, so that we can have an interesting insurance for everyone. So yeah, in conclusion, decentralized insurance still has a lot to evolve, but it certainly can revolutionize the insurance industry. It has the ability to enable different roles in risk trading. It has a high emphasis on transparency and fairness, leading to an industry with global and easy access to everyone. So you can actually be anywhere in the world insuring your assets and maybe not even owning them, maybe buying risk on, and maybe betting. So basically shorting an asset on risk. And we can imagine a world where people are a bit more satisfied with a linear operation that doesn't have such a high cost that ends up costing them more than it should, to have a fair deal between the two parties, the underwriter and cover buyer. So this is especially promising when we put into perspective real world assets in a tokenized world. And since it's a vision we share deeply with Avalanche and the Avalanche development. So I feel glad to be here. I feel glad to be exposed to this ecosystem where we have a very promising future on insurance. So yeah, that should be it. Thank you guys. Would like to ask do you guys have any questions?
Thank you for your speech. And it's clear how we can calculate the price for option, for example, based on some parameters of price movement. But how do you evaluate risk module and actually insurance price for risk of some protocols in general? How is your risk model built?
So yeah, that's the actuarial work, and it's quite a complex and expensive process. And if you take into consideration that very few people can do that work, and it has been a heavy load process of processing data, modeling, and taking into consideration a lot of parameters. It's something that is very complicated for us, at least. It's a very expensive process. So there are protocols that actually have their own in-house actual work being done. But we want to rely on a third party. We want to rely on people that can do that work and do it from the outside instead of being in-house, so that we can actually separate who is doing that work and us, since we're the protocol. We want to be the intermediary and not really defining that. We want to also have a community decision on pricing, so that users can vote on how they want to process it, and it actually leave that option to the community, and but have information available for them so that they can have a knowledgeable decision on the matter, right? So yeah, to answer your question, yeah, we would need an actuarial to be doing that work, but it ends up being a decision for the community.
Clear, thank you.
No problem. Anyone else? Can you wait just for the mic? So, thanks.
So has Degis paid out any claims yet? And I mean, you mentioned you're working with Platypus. Were you guys insuring the USP when they had that issue?
Yeah, we had that issue. So it was a big claim according to the current funds that we had. So it was a heavy hit on in a percentage wise. So yeah, it was we voted on a 70% payout for platypus stakers who were actually who got hit on that, because we also had platypus is a very interesting situation because it's actually these users could potentially get a payout since platypus lost those funds, but it's potentially going to get reminted. But the community ended up voting for a payout, so the 70% payout. So it's something to really take into consideration as well, right? How long should we take to define a payout? We have right now the protocol has a 5 days time frame to have that decision, and it's something that maybe other protocols could process better, but it could be frustrating for the users. So it's something that obviously has to be balanced, and it's something that we certainly have to discuss and maybe adapt for the crypto space. We potentially have that situation, and it could be worrisome for underwriters. For example, it could actually have them not really be willing to provide liquidity if it's the case, if everything has to be done so soon. No, very little information is available for the protocol to take an actual meaningful decision. So yeah, I'd say I think I should have answered you, I believe. Sorry. Thank you. Anyone else? Thank you, everyone. Thank you for your time, for being here with me. For those that are watching it as well, thank you. Yeah.